mic'd up for this? Oh, Ed, you're looking sexy, man. Give us a smile. I'm mic'd up on the camera, so that's really nice.
Who said, you know what, I shoulda, I coulda, I woulda. And you're retired at 70 years old, you can at least say, I tried. I took a shot. I gave a life. I was born in America and I gave it a shot and it didn't work out, but at least I gave it a shot. Don't be that person who says, I coulda, I shoulda, I woulda.
If you can get a 11-year-old child to understand your thesis, you can explain it to anyone. If a child can't understand it, it's way too complicated. Make it simpler.
Repeat these words. I'm not afraid of being poor. I'm not afraid of being old. I'm just afraid of being old and poor at the same time.
Very excited about it.
Without a doubt, the #1 value to Black Card has been the caliber of people.
If you have the drive and ambition to launch a fund, then there's no excuses once you join Black Card. Well, otherwise you're going to be figuring it out. Even with Bridger's YouTube content, it's not going to, get every little piece, put together.
And the ability to just learn. Like the knowledge, and nobody is, it's an abundance mindset versus scarcity mindset. And I think that is such a huge thing for anybody looking to start a business.
The best thing is the quality of the people that are in the group, right?
And that God loves you, and I wish nothing but success and happiness for all you guys.
And they have coaches in place to help you with that too, and to change your perspective around things. It's very, the incentives to be in it, they far outweigh what you pay out.
So the caliber of the people here has been the biggest value for this mastermind fund. The quality of the coaches, my gosh.
The ability that being around the people here, it gives you a push and a drive to step up more.
Nice cars, the office views, the investor calls that finally get returned. But they don't see the climb, the uncertainty, the setbacks, the silence after the pitch, the nights filled with doubt. We did, because we were there every step of the way. We provided the tools, the structure, the strategy. But the effort, that was all him. Everyone else sees the success. We remember the climb. This isn't a guarantee. It's a glimpse at what's possible when someone takes the risk and shows up anyway.
All right, people, welcome on today. We are live for day 2. We're gonna be doing a lot of Q&A today. Yesterday was fantastic. Type in the chat, hello. Let's make sure this thing's working. Type yes in the chat if you're ready to get going. Yesterday we had an incredible day. We had 4 fund managers come on live talking about how they built their funds and what they're doing in 2026 and 2027. So the next few minutes, we're gonna talk about the super cycle, what's going on, my thoughts, some review from yesterday, and we'll go from there, do some giveaways. And actually, I wanna jump right into Q&A. We had a bunch of questions at the end of yesterday's call that didn't get answered. I would love to answer them right now. If you have questions, and let's pull up the chat, type hey, what's up, guys? Good to see everybody. Welcome in, welcome in. Start queuing up questions if you can. If you're a VIP member, put a question in the chat. Excuse me, use the Q&A button in chat and put your email in there as well. We'll verify you're a Q&A member, and then you can come live and talk to me face to face. That's how we'll kind of roll for this morning. Welcome in, y'all. Let's do this. Can you pull my slides? Here we are. Good to see y'all, day 2. So yesterday was pretty fun. we talked a lot about the super cycle, and we're going to just dive right in. Is you guys cool if we just dive right in? Okay, we're diving right in. How I think we're in a super cycle. Now, other people don't think this. This is a contrarian view of the super cycle. There's only a few articles. BFC, people like Tom Lee calling for a super cycle. Commodities could be on the verge of a new super cycle. CZ saying we're looking to be in a super cycle in crypto. 3 semiconductor stocks to play in the AI super cycle. We're going to talk about this today in context of the overall economy of what's going on here. Now, yesterday we had some great speakers on. We had Trenton Smith. We had Percy Nikora. I'll pause. $3 billion of capital investment. Did a great job talking about what's going on in macroeconomics. We had Percy, came through Black Card actually. He's done 15 syndications. One's fund has over 290 million in AUM through his funds and syndications. We had Neil Bawa, who has over 660 million of AUM. Mad scientist of multifamily. He also has an alt street class. And we also had Scott McWhorter, just launched Iron Elk Capital out of Black Card as well. So I'm going to say this again. You got to come to our live streams. There's no replay from yesterday. I'll share some notes of yesterday, but we're going to do more of these in the future. Make sure you're on our email list. When we do these live streams, we do these live streams. And also, a lot of these fund managers don't like all their stuff being public on the internet. That's why we do these closed Zoom calls. They speak a little more freely, and we get their insights going, for these guys into 2026 and 2027. Also, yesterday we did a few giveaways. We'll do one today just because we're live day 2. Why not? Let's do a giveaway here. For fun, we did a bunch of fun stuff yesterday. Let's do $250. And since y'all are live here on Zoom, by the way, if you're on other platforms today, come to Zoom. It's funlaunch.com/hub. That's where you can win questions. That's where you can win giveaways and ask questions. Let's do this. Type a yes in the chat for me. And I'm just going to pick someone at random here. Type a yes, and we'll pull it open. I'll give you a few seconds here. And I'm going to actually pull open my Zoom call. Let's do this for a second. So it's funlaunch.com/hub if you ever get lost. This will redirect you right to the Zoom room like you see here. I got to put my, and I'll put my name in here. Oh, it wants me to sign in. Hold on. As you guys are typing yes, I'm going to get signed in. It wants me to be an admin. Because I'm going to show you the back end of what I am seeing on this webinar. Here we go. Okay, here we go. Let's do the first giveaway, $250. There we go. To Amazon. We're going to type it in right now. So type in the chat. Do it one more time. Type a yes in the chat, and we're going to pick somebody at random here. Okay, here we go. 5. I finally got it pulled up. Briggs, you want to share my screen now? Now you can see it. We have Q&A as well. So I'm going to pull my Q&A bucket up here. 5, 4, 3, 2, 1. All right, let's pick Rami. Rami, congrats. You got $250 to Amazon coming your way. By the way, this is what I'm seeing. I just got logged in here, so I'll make sure I see this. So I will see your questions. If you have questions, drop them in the Q&A. Let's answer a few of them now from yesterday if you get them queued up. So open up the Q&A bucket here, and we'll go live. Amber does not think this is live. Guess what, Amber? Your quote is live right now. So there you go, Amber. So drop some questions in the Q&A. I'll have them queued up here in a second. Yeah. Oh, love that. There you go, Amber. Yep, it is live. Yes, it is live. Now you guys are all messaging hosts and panelists. Make sure to message everyone. So change that in the chat down here. You toggle this from host and panelists to everyone, then everyone can see your comments. All right, we'll go back to the slides here. So now at the end of today's, we're going to do Q&A now. We'll do a little bit of other stuff in a minute, and then we're going to come back to Q&A. And I really want to get your questions answered as we go throughout today. So we just did a giveaway. Let's do one more. We'll make sure this is live for fundmanager.com. All right. Fundmanager.com is this is our new site here. You actually can upload your own logos on here and get merch. I think there's a 30 or 40% discount right now as well. So we're going to $250 of free merch on the merch store. You can actually build and do your own merch. So we're going to have you type yes in the chat one more time. Here we go. We're getting warmed up here. And then I want you to drop some questions in here. If you have a question and you're a VIP member, we're going to bring you on live in like 1 minute. So get ready. Type a yes, though, for $250 to the Fund Manager store. Yes, this is live. Here we go. 5, 4, 3, 2, 1. Okay, I don't want to say your name wrong, but Shernekith. I think that's the right way to say it. Anyways, you have won $250 to the merch store. So well done. My team in the background, Christian and Adam, they're going to queue people up and do some questions here. Yeah, let's go with this. So let's hit a few questions. Again, drop them in the Q&A bucket here as we go. I know people are kind of figuring out. So at the bottom of your screen, He says, I have a fund in mind that has a franchise connected to it. Do you think that's a bad business idea? Let's unpack this and we'll hit a few more of these. And by the way, this is a great example and I'll hide your email, but put your email in, then we can bring you on live. Let's hit a few questions here. So I'm going to change screens. Let's talk about some of these models from what we're doing. So, okay, you should be good now. Share my iPad for you. What you'll see here too, and let's see, yeah, pull my iPad up. This is what we share is the fund launch formula. It's how we help people launch investment funds. This is how we hit the Inc. 5000 of fastest growing companies in America, was teaching and helping people launch funds through the fund launch formula. This is how I successfully run 2 funds right now that manage over 300 million of aggregate portfolio AUM between Ugly Unicorn and Fund Launch Partners. We have done this all through the fund launch formula. Okay, this formula is pretty simple. When people come and want to launch a fund, most go, hey, I want to go talk to a lawyer first. Let me go talk to a lawyer. And I said, that's fine. But if you go talk to a lawyer first, most funds, I'll show a few slides in a minute, it costs anywhere between $30,000 and $100,000 to build your fund. If you just go talk to a lawyer, if you ask ChatGPT, that's what it'll tell you. Furthermore, this is a very expensive teacher to have. They're going to charge you $800 an hour to teach you about investment funds. Oh, and by the way, most funds never actually launch. Most funds pay lawyers this amount of money. They go try to raise some money over here, and then no one wants to invest, and you have some very expensive paper that never gets used, okay? Our goal at Fund Launch is to help make successful funds that launch. And so that's what we do at Black Card. That's what we do. So instead of going here first, what we tell people to do is go over here. And we'll unpack this more as today, but this frames how we're doing Q&A. I'll use this quite a bit as I draw today. But I tell people first, let's work on your deal and strategy. Do you have asymmetrical risk, which is a fancy word of saying relatively low risk for high return? What is the frame and structure of your fund? Are you going to run a 2 and 20? Are you going to do pref, catch up, carried interest? How are you going to run your fund? We'll talk about more of that in a minute. And then what I like to do, the goal, is go get real verbal commitments, actual commitments from people that want to invest in this fund. Go market test. What we are doing is getting validation on your fund or fund idea. So the question I got was, hey, franchise model, work with the fund, etc. We can unpack that. But if I had a great idea, I'd go and frame it out. I'd put the deal together. I'd frame the structure, and then I would go find people that are mentors, people I look up to in my space, and say, hey, do you have 11 minutes? I'm looking at putting a fund together. I would love to get your advice on if this is a good idea or not. Just like the guy asked me that question. It's a great way to do it. Ask for advice, because one of 2 things will happen. Number 1, they're going to give you some good advice. They'll be like, this is kind of wonky. It's weird. Let's fix some stuff. Or number 2, they'll say, actually, this is pretty good. Are you going to raise some money? And you go, well, yeah, we're putting this together, et cetera. And they say, well, call me when you're putting this together, because put me down as a verbal commitment. There's an old quote I love, and I'm going to say it. I'll say it over and over again. If you ask for advice, you generally get money. If you ask for money, people usually say no, and they give you some advice. It's kind of this funny thing. So if you want to raise money, go ask for advice. Go ask people there's opinion and gain validation on what you're doing. Y'all following? Is this making sense? Type a yes in the chat if this is making a little bit of sense. Y'all following? That's what we're talking about today. Then, and only then, we go over to the legal formation phase. And then now that's not too hard. Like I've launched now 3 funds of my own. We help manage about 13 funds through Fund Launch Partners. And then Black Card has 300 plus funds we've launched. When I go to a lawyer's office, I say, hey, I want XYZ with a drink and a side of fries. I know exactly what I want. And lawyers bill by the hour. They typically charge, like I said earlier, I'll show you some slides, but if you go Google this, it's about $30,000 to $100,000 to set up a fund. When I go to them, it's maybe 10 grand or less, or a little bit more. Because I save them so much time, because I know exactly what I want, how it's going to be put together. I already have capital in motion, and I can go get this set up relatively quickly. We file the docs, we then launch, we file our Form D, our Form ADV, all that stuff, and then we go, now we're a live fund, okay? We've crossed over the launch phase. We're gonna go back and actually get hard commitments of all those soft commitments. We're gonna turn them into hard commitments. We're gonna go to capital markets, then we're gonna go buy the assets, and whether you're buying real estate or businesses or whatever, and we're gonna hopefully those are making money. And then we're gonna build out the team, and you're gonna do this forever. You're gonna keep raising money, you're gonna keep buying assets, and you're gonna keep building out your firm. Okay? A lot of squiggly lines on here. Did that make a little bit of sense? Okay, so that hopefully will frame the Q&A's session that we're venturing into right now. That's what we help people do. So the first question I had was, I have a business model around franchises. Is that a good idea or not? It can be. I guess I would need more context. But yes, it totally can be. I've seen people they have a franchise model. Now, maybe you want corporate owned stores and you want more of them. So I've seen people raise money in a fund and then they go open up 30 or 100 or 200 more locations because they have the capital to deploy. And then you would raise a fund to do that. So yes, it can totally be a great idea. Well put. Christian, let me know if you have somebody queued up here. No one yet? Okay. What are your thoughts on actively managed ETF space at the present? New ETFs by major figures are popping up recently as well. ETFs are great. Those are much different than private funds. ETFs are traded with usually computers. Like the S&P 500 is an ETF. Dow Jones is ETFs. Those are all great. I think they've done very well. I think private markets also have a great place in portfolios. It's increasing. A lot of family offices now allocate between 40 and 50% into private market deals. That's increased drastically over the last 2 decades of percentage of capital. I'm talking multi-$100 million family offices, how much they cut up their little pool. A lot are going there. If I put an in-depth plan together, can someone review it? And is it worth moving forward with? Yeah, 100%. So, well, actually, let me share this. And by the way, keep asking questions in the chat. I'll keep trying to answer them. So today, also on our agenda, if you want to talk to our team, we do this all the time. Yesterday, I talked about Black Card, we'll share this, and maybe I'll put it on the top of my screen, but share my slides if you can. On our agenda today, we have a goal of giving away $1 million of credit towards Black Card. So yesterday, if you're on live yesterday, we talked about Black Card, what it is. It's our flagship product at Fund Launch. We help people build and launch investment funds. At the top of your screen, you'll see yesterday we have credits of $693,000 that we gave away yesterday in Black Card. We're trying to get to $1 million. So maybe today you guys can help us get $1 million in Black Card. Black Card is the ultimate incubator to launch your fund. So if you want someone to review this, what we're gonna do in just a few, I'll drop a link. You can book a call with our team members and they can actually review this and go over this with you. Now we're doing something cool. And by the way, Black Card is I'll be upfront with you. Black Card's about $35,000 is the approximate cost of Black Card. Now it can be a little bit lower, it can be a little bit more depending on if you have team members and partners and extra things, okay? We're doing something cool for people. Well, let me share this real quick. I'll go back. For Black Card, yesterday, we dropped something pretty cool for people that are in Black Card. If you go back to, actually, I'll do this. People that are in Black Card, you'll see, I'm actually just gonna pull it up. On Fund Launch here, people, when they join Black Card, and you'll see a full demo video. If you wanna go see actually what Black Card is, you can go see it here. But Black Card is this incubator that we help people launch funds. If you look here, we've had over 100,000 people go through one of our programs at Fund Launch. We've launched 300 funds. Our clients have reported over $4.8 billion of reported client AUM. Okay, if you scroll down on here, you'll see a little bit about Black Card, what we do, the mastermind aspect, the tools and resources, etc. You can just book a call here and talk to our team. Now, we're doing something pretty cool for people this week. This expires a week from today. A lot of people have looked at Black Card. It's been our flagship product. You can go hear testimonials of people that love Black Card. You can go see people that have launched their first fund, how they've done here and what they've built. We're doing something pretty cool. From now till next Friday, you don't have to pay $35,000 up front. What we're doing is you can join for $5,000 down. We will put you on a payment plan. We'll finance it at 0% interest. And also you can get $5,000 off your quoted price. So $5,000 off, $5,000 down, 0% interest, and you actually can join Black Card this week. Furthermore, we're doing an event at my headquarters in 2 weeks. You can fly out and be with us here in Salt Lake City, Utah. Just around that corner is a full court basketball court. You will be with us, and for 2 days straight, we're gonna do a little bit of skiing. We'll have our coaches flying. We're gonna help kickstart your fund and get it launched here. And then once you join, you'll see the back-end program. This is what it looks like. When you log into Black Card, this is what it looks like. You connect your CRM, Fund Launch 360 to this. You'll go down to the consulting here. You'll see calendar of coaching calls, office hours, etc. You get to work with our coaches across the board. I do my office hours every Wednesday. You'll see our event coming up down here. You can register for the event. And all this, all the great stuff included inside of Black Card. I'll highlight one or two things and then we'll move on. But you'll see the coaches down here. You can see all the myriad of coaches. For example, I'll highlight a couple of them. So we have Adam Campbell, for example. Adam has a master's in accounting from University of Utah, and he has a postgraduate study in business analytics from Harvard Business School. Okay, he's a coach. He actively runs a $30 million fund right now. He also coaches on the side in Black Card. Those are our favorite coaches. Peter Privian. Okay, you can see his stuff here. He actively runs a hedge fund with our other coach, actually, Jim Riggio. Them together, they actively run a hedge fund and they coach on the side. Okay, many of these, you can see Dustin Gomez actively runs $20 million real estate fund, coaches on the side. This is how we do Black Card. So you get a mix of coaching, consulting. You get to go through our incubator, which is our fund builder. This walks you through step-by-step of building your fund. Anyways, I won't go anymore. We have a pretty cool promo this week. You get to come to the event. You get $5,000 down, $5,000 off. What's going on? So the link is, if you guys want the link to book a call, it is fundlaunch.com right here /5K off. And what this will do, every time someone books a call, it adds to the ticker of $5,000 off. Here's the link. There's a few more call spots today. We've just opened up that you can go grab a call spot. If you want to talk to somebody more, great. That was one of the questions we just got. Great question. We can go from there. All right, there you go for Black Card. Sound good? So fundlaunch.com /5K off. Take 30 seconds right now. Go book a call with our team, and then we can we'll keep going. I already mentioned this. Well, we already hit this. I'm going to go back. My goal for today is that you should consider launching an investment fund. Okay. Yes, I currently run 2 funds. I mentioned this earlier. People have paid us $43 million to help them launch their fund. Okay. There's a Stripe notice right there. You can actually see from Stripe. Here's our stats. I just shared this a minute ago. We've launched 138 funds just in the last 2 years. So that's roughly 1.5 funds per week. Every week, we're pumping about 1 to 2 funds per week out of our incubator Black Card. And this has put us on the Inc. 5000, the fastest growing companies in America. So if you want to learn more, fundlaunch.com /5K off. Let's hit a few more questions here as we keep going. Let me pull open here. I'm going to pull up chat and then Q&A. Or maybe hide these just if there's, I don't want to have people's emails and stuff shown. Okay, back again. I have 9 divisions of my business, all operating in different industries. I want each to operate a fund or fund sat some point, investing in their respective industries. Is it better for each fund to be its own entity or partnership, or can one entity operate multiple? Great question from Darren. I see he's a VIP, by the way. He is. Darren, do you want to come on live? So we will promote you as a panelist. You'll come backstage, and then we'll bring you on live. I'm going to go back to my iPad. This is a great question. So you already have 9 divisions of your business, all operating in different industries. How can we build a fund around that or do that? That's a great question. So let's share. And Darren, come on live if you can. Flip your camera on. We'll promote you to panelist on backstage, and then we'll push you to the front of stage. Christian and Adam will probably try to promote you right now if you can. If not, I'll just answer it live here. So if you've got a business currently running, so here's your current business. It sounds like what he said. He goes, I have 9 different divisions. So I'm just going to put 9 up here. Divisions of the business. I'd love to get more context if you can come on live, but let's just, for now, I don't think we don't have the context. Can a fund do each one of these? Or should they be in one? So it sounds like he wants to do a fund. The answer is either way. So what's cool about funds, you can do both. You could do each one of these is its own fund, and it invests specific to that industry, or you do one big fund over here that essentially invests in the business, and maybe the business goes and does all these things. Both can work. The better question is, which one is better? And if I had a little more context, he could tell us if these, but I'll give you my answer on either one. If these 9 verticals all are very integrated and help one another, what you'll essentially have is, in private equity, they call it the hub and spoke model, where you have a core business and then you have ancillary businesses around it. So for example, we had a private equity firm approach us, Fund Launch, last year and said, hey, Fund Launch, you guys are doing really cool things. let's do a hub and spoke model. So I'm giving you an example. We did not do this deal, but this is the example they gave us. They said, hey, we'll put fund launch as a business here. I don't know. They're like, we're going to buy 30% for X millions of dollars. And then we will deploy, I think it was like $150 million to buy out a tax firm and to buy out a legal firm and to buy out whatever software you need. And they would all become under the brand name of Fund Launch. Pretty cool idea, right? It's called a hub and spoke model. This is very common in private equity. So they would do acquisition, and then change branding, merge the companies together, and collectively, this whole conglomerate would sell for a much higher multiple and could grab market share, et cetera. Anyways, great idea. It fizzled out. We ended up not doing the deal. We couldn't get the right terms. It just didn't work out. But still a great idea. We might do this in the future, by the way. It was a really cool idea. So when I'm thinking about your business, back to this question, you could, if these 9 verticals help one another, you could do hub and spoke. If they don't help each other, then I would keep them separate. I would separate these and go from there. Yeah, great question. Let's hit the next one. So I don't think he came on live, so let's hit the next one. I spoke with Dan yesterday. He said, have you reviewed? Okay, I can send me some details on if you want me to review your franchise deal, Poseidon, the name I see here. Yeah, just type it out in the chat and I would love to, I'll give you some thoughts. So type it out and give me some more context and let's review it. Let's hit a few more questions here. Yeah, good questions, y'all. So let's talk about capital raising. I had a bunch of questions yesterday about how do you raise capital, how do you do this, etc. And by the way, we can talk to you more at fundlaunch.com/5K-off. I've even got my cool hat here. Boom, 5K off. It's only this week. We've only done this once before, by the way, which was last November. We've never offered a discount Black Card. This is the second time we've ever done it, is this week and this week only. So 5K off Black Card. I'll put this hat right here. Let's talk capital raising. I got a bunch of questions. How do I raise capital? How do I do this, etc. This is what makes Black Card so special, in my opinion, and just what we teach with the Fund Launch formula is so special. People ask, so yesterday we had a few questions around this. So these are the 3 roles in every fund. You have your expert investor, your fund manager, your money raiser. Now, these people are raising capital. I have seen really good capital raisers move verticals and they can't raise money. There was a guy or a gal, they worked at XYZ shop and they've raised $200 million. And then they come work for a different firm and they literally raise $0. It's really interesting. Money raising essentially is sales. Think about a company. It's really just sales and marketing. What makes sales way easier is a great product. I actually met with this founder of a local company here. He sold his company for multiple billions of dollars. He's a mentor of mine. Really sharp dude. And he said a quote that has stuck with me since. And he said, and think of all the stuff you do in a business, but he goes, marketing and sales. I'm going to write it out because I thought it was that profound. Marketing and sales are a tax on a bad product. Every dollar you spend on marketing and sales is a tax on bad products. Meaning, if you invented a time machine and you just had one of them and you told 3 people about it, do you think you'd have to do much marketing and sales? No, those 3 people would probably tell 3 more people, and the whole world would know about it in the next, 24 hours because the product was that amazing, right? Now he goes, sales and marketing are a great function to have with a good product, but I thought this was so interesting. So when I think about capital raising, I go, the worse the product, the better my salespeople have to be. So how do I first off create a great product? And when you think about an investment fund, it is a product. You are creating a security. You're creating an investment product that you're trying to sell to investors to invest into that will then produce a great return. And so when I look, sorry, you're probably going dizzy. I'm going up, in and out. So I think about building a strong edge. How do I find a great edge in my business, in specifically my fund? There's 4 distinct categories of how I could build an edge. Okay. And they're right. You obviously can see them in front of you. So the asset class, just by being, for example, a couple years ago, if you were a venture capital firm in AI, that was an edge by itself. For us, we have a fund in GP stakes. It's a very hot asset class. Just by us being in that asset class, people take our phone call. They want to meet with us because we're in a unique, compelling asset class that a lot of family offices are looking at. Crypto at some points have been a compelling asset class. Okay, that can sometimes be your part of your edge. With that, so your asset class, then it's your strategy. So how are you going to capitalize on that asset class? That can be your edge. Third is your team. Your team can be your edge. If you had a star-studded team, it doesn't even matter what the asset class is. Like, oh, okay, I'm investing because that team is so good. And then finally, structure, how you actually pay out investors. So if I zoom in, this is your competition when you guys are building funds. You are competing against someone doing multifamily real estate. They're doing value add. They've got 20 years of experience and have already ran 3 funds. And they're charging a 2% management fee, 8% pref, and 80-20 split. Why would I invest with you when I can just invest with these guys? They've already done this for 3 funds. Like, why would I invest with you? You've got to figure out what your compelling edge is. So for example, this is what we did. We positioned, this is Ugly Unicorn and Fund Launch Partners. These are my 2 funds. We positioned ourselves in emerging asset classes, GP stakes and cryptocurrency and blockchain. Next, we feel like we have a very compelling strategy of how we source deal flow, etc. in these funds. Now, our team is good. It's not like knock your sock. It's because we're relatively new fund managers. We haven't ran our funds for 30 years. So I kind of put it as it's good. It's not amazing. It's not bad. It's just good. And then our structure is pretty standard. We're a 2 and 20. There's nothing really compelling about our structure. So this is how we define our edge. This is my dad's first fund, okay? He was doing bridge loans, kind of a boring asset class. Nothing that unique about the asset class, but his strategy was very good. The way he approached the asset class was good. His team, they were just a couple of new guys. Most people on this call, you're kind of a new fund manager. Your team's going to be probably pretty not small, but their structure was very good. What they told investors, I believe, was investors got let me make it smaller here. Investors got 18% back first, 0% management fees. They essentially said, we don't make any money until investors make an 18% return first. Then I think they split 80-20. And then once they got over, I think 25% or something like that, then they split 50-50. This was a very compelling structure for investors. They're like, hey, we're putting our money where our mouth is. We don't make $1 until you make 18% first. Investors liked that a lot, and it worked out well. That gave them an edge when pitching their fund. Okay, so when you're talking about great products, that helped them quite a bit. Is that making sense? All right, Christian, anybody behind the scenes? Okay, sweet. Now, I want to do this. I'm going to pause for a second. I'm going to go back to my slides here. And I want to share a few things about stuff that we've done and also talk about the current market we are in. Because I think about building a fund, and we had a couple questions yesterday about timing. Timing is so crucial for what we're doing. And I think the time we are in right now is immensely important. Is that okay if I share for a few minutes about market dynamics, timing, at least what I'm seeing? And I'll take some summarize of the 4 fund managers we had on yesterday and summarize some of the things they shared with us for today. Is that okay? Type a yes in the chat if that's all right. Thank you for the engagement, by the way. It helps, it's fun to have engagement, but also it actually helps you remember the content better. Psychologists tell us if you engage with things, you tend to remember and retain the knowledge better. So if you're on YouTube or Facebook or whatever, like the button or type in the chat or, it helps the stimuli to remember stuff. I'm going to go faster. So if you share my screen, it's our last slide here. So again, we've helped people do all these different types of funds you can see here. We are not new. Many of you are like, does it work for me? Yes, we have helped literally all these types of funds launch. all across the country. We have seen every little nook and cranny of funds across the board. So with that, now I'm going to skip this a little bit. Some of you guys know my story. I started 6 businesses my first years of college. I started a church mission here. I spoke Mandarin Chinese in Taiwan. Came home, I launched Blackbridge Holdings and launched a few other funds. I'm going to skip through this because we want to get to the next piece. There's my family as well right here. So we are talking about what is a fund. Let's talk about right now, okay? What is going on right now in the world? We have a bunch of major things going on. So again, timing is crucial. I'm going to hide the slides so you don't read ahead, okay? Timing is crucial with all funds. And if you can pick a timing to be in and out of a market, your odds of success increase. Now, no guarantees, but odds of success increase if you can catch certain waves. Right now, I believe there's a couple waves happening in the world. And some of our speakers yesterday agreed with this. Neil Bawa yesterday, he manages $660 million of real estate. And he said he has a brand new talk he's just pointing out for this year. He speaks around the country and he calls it 3 years of pain, 3 years of gain. He goes, what's interesting, we just had 3 years of pain in real estate, immense amount of pain. He goes, I think we're going to enter 3 years of gain over the next 3 years because of market dynamics. He goes, what's cool about right now, if you're entering real estate right now, you don't have to go through the 3 years of pain me and everybody else just went through in real estate to get to this moment to now have hopefully 3 years of gain. It's a very unique moment in time right now where someone with a fund, if you position yourself in front of the tidal wave, can do very well. Is it okay if I talk fast for the next few minutes and give a lot of data? You guys cool with that? Let's get in some meat of some stuff here. So this is the Monroe Doctrine. Now I'm gonna hit a bunch of data points talking about the United States, its position in the world. Now, love him or hate him, Donald Trump and the administration have done quite a few interesting things in the last really first year of the administration. Number of those has been aligning with the Monroe Doctrine. This comes from James Monroe, who is our 5th president. The idea was the Western Hemisphere is the United States hemisphere. This at the time, they were kicking out European colonizers to say, hey, stop colonizing here. This is ours. We've seen this been referenced a lot with Greenland, with Venezuela, etc. We're going to touch on those for a few minutes. I'm going to come back to this in a second. Okay, let me go down to right here. Okay, Monroe Doctrine. So Greenland. There was officials at the White House yesterday discussing Greenland and a potential deal for Greenland. You can see these maps here looking at shipping lanes. As the Arctic actually melts, some of these shipping lanes are opening up. Furthermore, it's very actually close to Russia. It's only 932 miles to Russia from Greenland. More trade routes. This is very critical earth minerals. You can tell why the Trump administration is interested in Greenland. By the way, by doing a deal, if we spent $5 billion, $5 billion, which is a large number to some, but to the government, it's pretty darn small. That would give roughly each citizen of Greenland about $50,000 to $100,000 of cash. And we could buy the whole country, which is interesting. If you did 50 billion, which is still, anyways, big or small, depending on how you look at it, that'd be about $1 million per citizen, which is quite crazy with all the things here. We also have major protests in Iran going on right now. There could be a full collapse of Iran. We talked about this with Trent yesterday. This is happening, I mean, in real time right now. We saw their entire currency collapse last week. Whenever you see a currency collapse, I mean, what other option do the people have? When everything you worked for your entire life is really denominated in a currency in a banking system and it fails, usually the only option is to protest and or revolt against the government. We've seen, I mean, it's hard to get clear reports, but thousands of protesters that have been killed, tens of or hundreds of thousands of protesters on the streets right now. This is very interesting to see maybe an Iran regime change to more of an open democracy, okay? We also saw Venezuela the last week. This is interesting. And I put this meme up. I actually, again, I'm not here to talk politics. I'm just telling you what is happening in the world. I thought this was funny though. This is George W. Bush the first. We're protecting Kuwait, not chasing oil. We're bringing freedom to Iraq. We don't need the oil. We are invading Venezuela for the oil. I loved how transparent the administration was. Like, no, we are here for the oil. Yes, we're getting Maduro out, who's a bad guy. We're also helping with things, but we are also taking the oil. and Trump even tweeted about this, 30 to 50 million barrels of high quality sanctioned oil to the United States, sending it, and we're going to split supposedly split the profits with Venezuela and ourselves to make both countries very wealthy. At least that's the plan. This is crude oil reserves. So look at this. This is Venezuela, has the largest crude oil reserves on earth, above Saudi Arabia and all these other countries. This is at a very strategic asset the United States has just acquired. If you take this in context against Russia and other enemies of the United States. So Russia's biggest export and biggest part of their economy is oil. And that's what Europe buys a lot of oil from Russia. Now this is going to take a little bit of time to get these oil reserves online. You can't just drill oil tomorrow. It takes a little bit of time. But once these are online, Trump seemingly can go to Putin and say, hey, Putin, we've stopped you on a few fronts with Ukraine, military-wise. We've sanctioned your banking system. Furthermore, we have all the oil. We don't even need your Russian oil anymore. We actually can just cut you off, and Europe will buy all their oil from us. And the rest, and we are now deeper allies with Saudi Arabia as of last year. We don't really need Russian oil. We could starve your entire economy out. So would you like to negotiate and bring peace to this war? That's a strong negotiating piece of leverage that we now have with the Venezuelan oil assets that we did not have last month. This is an interesting play for a number of reasons. We don't have time to talk about it. Now, I'm sharing, this is more geopolitical events. Now let's look at specifically the United States and what's going on here. We have unemployment rate below expectations at 4.4%, which is incredible. I mean, people switch jobs. There's always going to be a little bit of unemployment rate. 4.4% is very manageable. Secondly, inflation has stayed pretty low at 2.7%, below expectations. Furthermore, let me go back. Sorry, we had it up here. Tariff revenue, you have $190 billion from tariffs. You also have our trade deficit, which has been cut in half in the first year of this administration. Look at this. We're around just over 25 billion when we used to be floating around 60 to 70 billion. If you take away these outliers here, pretty significant. GDP growth, we just printed a 4.3% GDP in the largest economy on earth. That is significant. Very significant. We had 3.8, 4.3, and Howard Lutnick pushing for even more. Actually, do we have that video queued up, Briggs? Let's cue that up from Howard Lutnick here. I think this is worth watching. And again, this is painting a context of where I believe we're at with America right now. And when you have a fund or a business that's positioned in front of, these are tidal wave things that are coming towards America right now, it is massive. So let me know when that video's thumbs up. Okay, make sure the audio works. We're gonna play this video and we'll talk about it right after. This is, so sorry, to frame, this is Howard Lutnick, Secretary of Commerce. He's the one that's been negotiating the trade deals. He's been the one doing a lot of these things. Very successful business person. And he's going to open it up talking about this. I'm sorry, I'll share one last thing, Briggs, before you go. The White House has $9.6 trillion of committed investments in the United States. You can see some of them here, okay? So let's see if it'll zoom in. I'll zoom in for you. But you can see some of them. Meta, Apple, foreign governments have committed trillions of dollars into investment. For example, like AWS just built a $10 billion, or they're building a $10 billion plant in Mississippi. That's huge. If you have a construction company in Mississippi, it's estimated $8.8 billion will go to construction, non-technical IT workers. That's a big tidal wave if you're a contractor in Mississippi in this local market. By the way, 10 billion is 0.01 trillion. We have 9.59 trillion left to be invested in America. You're going to hear them talk about hiring electrical engineers, etc. All right, you ready? Let's play the clip and then we'll talk about it after.
Capital. Okay. Open your plant. We have spreadsheets. I went over them yesterday.
Right.
We have spreadsheets of promises.
Right.
All these people have made these promises. Okay. Call them. 30 construction projects launched that would never have been launched. So here's my view. I told you that I thought in the end of this year, we would get to 4% GDP growth. I said it in the first quarter and 4.3. So our fourth quarter GDP will be 1.5 points lower than it otherwise would be for this oddity.
Just the furlough. That's 150
so it'll be,
basis
so
points.
like the common economists think the fourth quarter growth is going to be 1 point. Okay. They're just like wrong. I said they were wrong in the third quarter. I said they were wrong in the second quarter. We have a 3.8 and then 4.3. We'll probably be like 2.5.
But that would have been to your point 4.
4.
Right.
Next year with all this construction in the ground. Like this Friday, I'm flying up to New York to Micron's groundbreaking of their tens of billions of dollar factory in upstate New York. That's just another example, right? Then I'm going to Detroit where they're doing a huge, new build, new auto plant, and they're building their engine plant, and it's just fives. You're going to see fives in the greatest economy in the world. You're going to see fives. And people think, you can't.
I mean, 5% GDP on a base this big is just, it's enormous.
Right. We have a $30 trillion, so 5% is 1.5 trillion in growth. And if we cut rates, you'll see sixes. And people would never, before Donald Trump walked into that office, don't think that's possible. And what's 6 mean?
Let's just put 6 in context. 6 was China at its peak under central planning with a tight control on every aspect of its economy. That was what the world knew as what 6 looked like in the modern era. And now the alternative version of 6 will be the president, you, the team, in a much more open way. I'll be
You
shocked.
would have said it could never happen.
I would be shocked. I mean, that's an incredible.
Okay. You're going to put it this way. It wouldn't even be fun for you when we see the fives.
Yeah.
Because they'll be so soon. They could be this quarter, as in the first quarter. So then I'd say, well, you have to come back and see me when it's 5. But then you'll come back in a couple of months. And then you'd say, Howard, I just spoke to you for an hour. I don't need to speak to you again. But you're going to see fives, like as in early in 26.
That's incredible.
And then if they cut rates, and that's the thing, I need a new Fed chair who cuts rates. And if they cut rates,
sixes.
You'll see sixes. And what you're going to see, what that means is jobs are abundant.
Yeah.
Good jobs are abundant. High-paying jobs are abundant.
Right.
Construction jobs, you just get paid more money to be who you are. You make more money. And that is not inflation. That is called 6% GDP growth. See, if you have no growth and I pay you more because you demand more, that's inflation. That's right. But if I'm like trying to build a factory because I'm kicking tail and I have to share some of my profits with you to convince you to come to work.
Well, I'll give you a perfect example of this. I am the lead investor in a 1 gigawatt data center project in Arizona. We have to pay electricians between $500,000 and $750,000 a year, which is more than what we pay the engineers that work at the models at a Facebook. But it's an example to your point of just the economy has created earnings potential across the board in ways that I've never seen in my career. It's really quite incredible.
So what an interesting clip. This was last week from Howard Lutnick. Now we'll see what happens, but to see 4.3, give me a second. I'm going to pull this slide up. I'll give you 1 second though. To see 4.3 already and to say we could be at 5, now you can share this, or 6 by the end of next year is absolutely significant. I mean, even if we just stayed at 4, that would be, if we had 4 across the board for 2026, that would be significant. But to say 5s or 6s is bonkers. And this would be the second year of this whole plan that's engaging. A lot of these construction projects and other things have not even fully been vested in this plan here. We've only seen this type of scenarios a few times in history. And that's why I keep talking about we could potentially be in a overall super cycle through with all this. So if I summarize here, let me share one more thing. Let's just do this. Let's roll that Cathie Wood video. I love that video. And then I'll go kind of a summary here of how we're seeing this. Now, to frame this video, this is Cathie Wood. She runs ARC Innovations Fund. They manage about $20 to $25 billion. She shared this video beginning, I think, first half of last year. People laughed at this video. And now we're seeing just what Howard Lutnick say come to fruition. Everyone said, this is not possible. It's not happening. It's too out of the park. And now it's coming more into play. And that's what Howard just said. He's like, you're not even going to be excited when you see 5 because you're going to be anticipating a 6% GDP growth. It's unreal. Let's roll Cathie Wood and then we'll all kind of talk about it right after.
We believe that real GDP growth is going to accelerate in the years ahead. We think in the next 5 years to 7%. If you're an economist, you think that's absolutely crazy. If you look at what happened around the turn of the last century, telephone, electricity, internal combustion engine, we went from roughly 0.5% per year of real GDP growth to 3% for the last 125 years. That's a 5-fold increase. So 3-ish%, this is a global real GDP growth number, to 7, that's, we have 5 innovation platforms evolving with AI turbocharging all of them: robotics, energy storage, AI, blockchain technology, and multiomic sequencing. So we should see a much more rapid acceleration this time around than last time. We're being conservative when we say 7%.
So that video, again, the timing of that is crazy to now see it coming out. The 5 platforms she mentioned are these. Again, these are platforms that are then built on. What's interesting about right now is we are seeing the convergence of these technologies. So your robotics is great, but it's only as good as energy storage, and it's only as good as artificial intelligence mixed with it. When you converge these things, you see a massive, massive growth. Where is that? Let's see. The previous ones we saw, like she mentioned, the turn of the 1900s, telephone, electricity, combustion engine. You saw a 5-fold increase during that time period because of technologies that were converging. Turn of the 2000s, we saw the internet and personal computer drastically change everything. Yes, there was a dot-com bubble in 2001. Some evaluations dropped 80% in a year, but guess what? Where's the internet at today? The last 20 years has been remarkable. It's second nature to us. Now, are all these technologies going to hit this year? No. These things take time, but we are in an overall wave of things that are happening right now. We had Neil Bawa on yesterday. He's heavily involved in robotics. He's like, I know we have these Tesla robots that are coming out, but he goes, I really think it's going to be 5 or 7 years before they're actually used in the real world, day-to-day settings. They can use it in a closed facility, a factory, but still the amount of disinflation we see coupled with growth is massive. I'm going to go back to this. So when I do a summary here, we have a trade deficit that's cut in half. We have tariff revenue up $190 billion. That was only half of a year, by the way. And we'll see if the Supreme Court upholds these tariffs. We'll see how that goes. But either way, unemployment at 4.4%, below expectations. Inflation at 2.7%, below expectations. GDP at 4.3%, with line of sight to 5 or even 6 this year. We have control of the largest oil supply on Earth. We have a new Fed chair in May that looks like will cut rates drastically. We have 5 emerging technology platforms at one time and $9.8 trillion of investment in the United States. How would you be bearish on this country over the next 5 years? There's a great quote that says, a rising tide lifts all boats. Now, could there be choppiness? For sure. Can we have a sell-off? For sure. But when I think about a longer cycle, which most fund managers are looking at longer cycles, 5, 7, 10 years. And we're in the game of predicting the future, which is a hard game to be in. But the data I'm looking at here goes, man, there is a lot of great things going on, and I don't want to miss it. Now, you might be thinking, I should be contrarian and do the opposite of what Bridger is saying. The fact that Bridger is saying this on a public webinar right now means I should probably short it or do the opposite. What I'm telling you, though, is contrarian. Most of the market is bearish. This was just a few weeks ago. This is the fear greed index from the crypto and stock market at extreme fear. Extreme fear. And if you go on Twitter, every reply guy on X is like, it's going to crash. It's an AI bubble. It's going to pop. Crypto, everything's going to go down. There's no way. What I'm sharing is the contrarian view. If you go look this up, there are hundreds of articles about the AI bubble popping. There's only a few articles about the super cycle. Okay? What I'm sharing is contrarian. Okay? At least that's the way I view it. You can make your own decisions. This is unprecedented what we are seeing. And I like studying history, and I know you guys do too. You only see this every 20, 30, 40 years. The last one was the internet. You can look back, there was maybe a period in the 80s and then maybe a period in the 50s that you had explosive growth like this with one or two technologies. And then you go back to the turn of the 1900s with all those that Kathy Wood mentioned. When I'm old and gray, I don't want to look back and say, man, how did I miss that? Many people today look back to the internet and say, gosh, how did I miss the internet? The internet was hype. It was a scam. It was a bubble. Don't trust it. They're going to steal your money. And billions and actually now trillions of dollars have been created from the internet. One emerging technology. We have 5 of them happening right now with the most pro-business government I have ever seen. With $9.8 trillion of investment. I mean, I really believe we could be in this super cycle. Yeah, you can see some comments here that all of the data is lined up for this right now. There's only a few investors talking about this. This is one of them. Talking about, he thinks we're in this 20-year super cycle that we might be entering that's going to change the entire world. I'm a big believer in seasons. This was me with Tony Robbins earlier, I guess, about a year ago. And he harps on this thing of seasons. You got to recognize the season you are in. What I'm sharing with you today is I believe the season that we are at least starting in, we're currently in, and I think will extend over the next at least few years. I'm going to skip down. We already shared some of these. My message to at least myself, you can do whatever you want with this data, is don't be on the sidelines. I look at my businesses. I told my wife this the other night. I'm like, honey, there's times to reap. There's times to sow. Right now, we got to be in the game. We got to be planting seeds, working hard, because cycles like this don't happen very often. If we hit it just right the next 2, 3, 5 years, this could change our entire life. And yeah, people say, I've said that for years. In 2019 and 2020, I was like, oh, let's hit it hard. But like now I step back and go, look at the macro cycle. Oh shoot, this is actually a moment to be in. This is why, and I look at these other big founders like Sergey and Jeff and Mark, they're all back to work full time in their companies. Full time. These are people that have billions or hundreds of billions of dollars. They are back because they want to work on AI in the super cycle that we are in. I'm gonna skip forward here. Invest in the wave. We have not just one tidal wave. We have 5 tidal waves hitting right now. How do you play in this game? How do I participate? For me, number 1, I want to position my companies in front of these waves. Number 2, if I can put a fund in front of one of these waves, I think we'll do pretty well. And hopefully right now, maybe your wheels are spinning. How could I build a fund to be in front of one of these waves? For example, I love blockchain. I think blockchain is a future emerging technology. One of the ones Kathy Wood talked about. It'll be instituted in every financial institution. I said, how can I be in front of this? I buy crypto, but how do I do more? Let me jump down. Me and Dan built Ugly Unicorn. We built a crypto long-term, not a day trading fund, a long-term blockchain investment fund. We raised about $25 million from investors. If that 4X's, by the way, to $100 million, which by the way would, our investors would love that. We make 20% of the game. We split 80-20. That means Dan and Bridger would make a $15 million. Our investors make 200% return. That's how the math works on funds in a basic level. If you help enough people get what they want, you'll eventually get what you want. If you're curious about how you could build a fund, we have a full incubator to do this. We have a cool promotion going on right now, fundlaunch.com/5K off. Hit the link. Talk to our team, see if it's a right fit for you. All right, let's hit a few more Q&A questions. Let's go back to that. I want to share about the super cycle because I do not want to miss this right now. So let's do this. If you have a question, if you're on another platform like Facebook or X or something, go to fundlaunch.com/hub. Come on over, join the Zoom call. You can ask questions here directly. We'll even bring some people on live. If you're a VIP member, you'll come on live with me and talk. If you have to leave this call for whatever reason, book a call with our team, 5K off down below. This only goes through next Friday. Next Friday at midnight is the deadline cutoff. This is the second time we've ever done a promotion like this in Black Card. We have an event in our office. Come hang out with us. All right, let's pull up some Q&A. Let's go to it. Megan, Ryan, we see you guys book calls. Congrats. Welcome in. It's awesome. Someone says primed for the pump. Will there be a replay offered? Currently my iPhone. Font's too small to read. Yeah, this part, yesterday there's no replay, but today, yes, there will be a replay sent out. You can see this on YouTube, etc. Deadline is next Friday for the 5K off, 5K down, we actually will finance you internally. I literally, 2026, I'm like, I want to help more people build funds. We are democratizing Wall Street. We got Fund Launch AI coming out hopefully in a few months. I mean, this is a time to lean in. If you can't tell, actually, my businesses, I love, watch what people do, not what they say they do. You know, I listen to these guys online that are these offline, they'll tell you to do drop shipping or they'll tell you to do it. Most of them are doing private equity right now. I like to watch what they are doing, not what they say they're doing. Like Grant Cardone will tell you to buy real estate or do sales training. What's he doing? He runs an investment fund. So I'll tell you what I'm doing. I run 2 investment funds. I do this every day. I practice what I preach. Secondly, we are building Fund Launch AI to plug in all of these great things to give you guys a great platform to build your funds on as well. That'll be coming soon. All the Black Card members will get first access to it down below. And again, if you want to get access to Black Card, it's fundlaunch.com/5K off. All right, let's hit a few more questions here. Drop them in the Q&A chat if you have them. The chat gets a little muddled. You can put them there, but you can do it here. Megan, is this good for real estate? Not just stocks. Yes, 100%. About 45% of our clients at Fund Launch are in real estate. So yes, this works extremely well for real estate. So a lot of people, maybe share my screen. Let's do it, Briggs. See if that works. Oh, I did plug in the wrong thing. There we go. But a lot of people come to us saying, hey, I've done a few real estate properties. I would like to play bigger. And why play bigger? Let's share my screen real quick. So let's do this. Real estate. We had a guy yesterday on. He's like, hey, I flip 2 to 3 houses a year, which is great. He said, do I need a fund? What would I do here? Well, I guess you can do whatever you like, I told him. But we've helped a few guys in Black Card build funds. For example, one guy, we helped him build a $5 million fix and flip fund. He took that money. The next year, he flipped around 72 homes. The next year. When you have a fund behind you, you can do a lot of things. Number one, you can just do more deals. You can close faster. Hence, you can win more deals because you can close faster. Secondly, you get a cheaper cost of capital. You're not borrowing from hard money lenders. You can actually look at banks and get usually cheaper debt from banks because you're a larger client. Banks cater to larger clients. Third, you get economies of scale. What does that mean? If you're flipping homes and you have a guy that does your paint and a guy that does carpet, you can say, hey, we're going to give you a volume play. Give us a group discount. I'm going to have you paint 15 houses for me. Can you give me a discount? And most of the time they say, yes, that would be phenomenal. So what happens is your average cost per flip drops because you have cheaper debt, economies of scale, and you can actually close more deals. Furthermore, most people that do this end up wanting to buy bigger deals. So instead of doing one house at a time, they go buy a 35-unit apartment complex. Everyone and their dog can bid on a single family house. I went 2 years ago, I bid on this is when the peak of the market. There were 43 full price offers on a duplex. I think 8 of them were above asking price and cash. They held an open house for 24 hours. I was going to put an offer in. Talk about competition. Very few people can bid on a 200-unit apartment complex. You know, if you have 43 bidders over here, you'll have 1 to 2 bidders over here. Hence, you can get better deals. That's why most people scale. Okay? If you're looking to scale, you want to launch a fund, fundlaunch.com/5K off. We've booked 103 calls so far. You'll see our clicker. We are going to cap it at $1 million here, which I think is about 61 more calls. Is that right? 61 more calls. Okay. Hit that link. Good questions, y'all. Drop more questions if you have them. But yes, this helps in real estate. This helps with stocks. This helps with lending money out. They're all actually structured pretty similarly. Yep. Yeah, thank you, Megan. Yeah, good question. So if you didn't see this, I'll read it out again. My team was just reading it to me. Reed, I'm excited to have bought the black card last week. Congrats, Reed. Welcome in. Looking forward to learning from these great coaches. Hopefully you're coming to our event in 2 weeks, Reed. That'd be awesome to have you. Is there a good, and Reed, come on live if you can. Is there a good market appetite for a straight, safe industrial real estate fund? Not targeting huge returns, just safe and steady. Good question. And I guess the answer is it depends. You're asking, is there a good appetite for investors to have this? I'll give you 2 answers, and Reed, feel free to come on live if you're there. My team will message you behind the, they'll promote you to a panelist backstage, and then you will come to webinar, and Adam and Christian will message you privately to how to get you to come on live. As you're coming on live, I'll give you a little sense of how I'd answer this first off. Number 1, it depends, because it depends on who you're pitching and the competition you have. I mentioned this earlier. What is your unique edge? Now, what you just mentioned with me is safe. Our strategy is safe and steady. Is there a market for that? Usually, yes. Now, I don't know what location, part of the country you're in, and if you're going to be taking these investors. So what I would tell you, Reed, is do this. Do your deal and strategy, do your frame and structure, and actually go pitch real world investors and ask them that exact same question. And they will tell you yes or no, because these are the people in your market. Now, I'll just tell you in general, there are quite a few large institutions that have safe, consistent real estate funds. So, and I see you there, Reed. You feel free to come on live. We'll push you to, you'll hit the bottom, push to webinar. So we'll push them on, Adam or whoever can push them on live. So that's what I would tell you is, number 1, test the market. Number 2, there are quite a few funds that are a little more safe, consistent real estate. But yes, there are real estate funds that are investors that still look for that. So kind of a mixed answer. Reed, good to see you there. Can you hear me?
Hi, I can. Can you hear me?
Yes. I'm not sure if you caught my answer. I'm sure you were hitting buttons behind the scenes, but
I missed everything because he was telling me how to come on live. So
yeah, no worries. My answer was I would test the market. So I would test with investors to get validation. So it's a hard to answer this. Now, in general, yes, there are a number of safe, consistent real estate funds. REITs are that, for example, or these large mutual funds that are in real estate. However, some local investors to you may like what you're doing with a safe, consistent real estate fund. I've actually seen quite a few do well. So the answer is mixed. You gotta test your own market to see if it fits. But yes, in general, I've seen that work.
Okay. That's
any follow-ups to that question since we finally got you on live here?
Well, thanks. Yeah, so my strategy has been industrial real estate. I'm in maybe 6 different states, and we have about 100 million under management, which is mostly me. I've just done friends and family, and I do not know how to raise capital. That's my issue. But I love real estate, and I think industrial is really poised for growth because of all the things that you said. By the way, you're a great speaker. So I think that there's potential for a lot of growth and much better, very nice returns, but I don't like to promise that. So I'm thinking, nice 8 to 10%, 8% cash on cash with the mid-teens on exit for IRR. And I just don't know, I look at all of these things that other people are promising with blockchain and businesses, and they're talking about 20%, 30% IRR. I would never promise that. I can't deliver that. So I'm just wondering, how do I compete in the face of other people that are promising better things, but probably with higher risk?
Yep. You hit it right on the head at the end there. It is, when I look at, let's see, share my screen if you can. It is easy to chase, higher IRR means better fund, which means more money, right? That's kind of what we think usually.
Yeah.
Typically, it's not the case though. Now, first off, these are promises. Second off, what we've actually seen is the opposite. What investors perceive is higher IRR in a fund means more risk. I should put less capital at risk. Here's a question. What's the best selling financial instrument of all time?
Probably U.S. Treasury bills.
U.S. Treasury bill. What does a U.S. Treasury bill yield? 3%, 2%, 5%? That's there are trillions of dollars that have gone into U.S. Treasury bills that print out 3%. I mean, if you could sell that, that's way better than selling some crypto fund that's going to do 55% next year, right? Because more dollars come in here. So I used to think the same way, and I thought, oh, shoot, I got this. I had to rewire my brain of like, actually, it's all about, and I'll go to this one, risk control return. So showing asymmetrical risk, and actually more money will flow to you if you can show that you've got relatively low risk for a standard or above market return. And if your market return is 10% and you're saying market's 10, I have low risk, but I can get you an 11.5. That's phenomenal. And I think you raise more money because it's perceived as a safer asset.
All right. That's good.
Yep. Now let's hit one more question since you're here. And by the way, welcome to Black Card. I know we're just doing this promo this week. Feel free to talk to my team. We're doing 5K off. I want to honor that and make sure that you're taken care of. So talk to my team and make sure that we, it stinks to join Black Card and then we do 5K off the next week. So make sure make sure you're made.
They gave it to me. It was all good.
Oh, they gave it to you. Oh, good. Okay, perfect. Want to make sure you're made whole. Let's talk about capital raising. So I mentioned earlier, having a good product helps. Having a good partner helps. By the way, if you're not a natural born capital raiser, maybe find a partner who is.
I have one. I just brought him on. We're doing this together now.
Oh, good. Okay. So now let's go a layer deeper. This is all spelled out here, but I organize capital raising into 3 buckets. And you can see a funnel here. Number one is, and hopefully you can see this. Maybe, I don't know if we got to make it full screen for you. But number one is,
turn my phone sideways, so now I can see it.
Okay. Number one is just getting in the room. Am I around people that are wealthy? Like, am I in the room? Am I in the vicinity of people that have money? Number 2, am I connecting or warming those people up so that I have the chance to actually pitch and close them? And that's each bucket. So some people, they get so hung up on their pitch deck and how they close, which is down here. And in reality, they need to get more rooms and just connect with more people. Now, and I'll caveat these two. I have a friend, he comes from a very wealthy family. He gets in a lot of great rooms, but no one sees him as someone that actually can manage money. He's just the son. He's the son of some rich guy. He's in a lot of good rooms, but he has no way to connect with people because he doesn't know how to do that. That's a whole skill on its own. And then finally, how do I close that? Now, we could do a full seminar on these 3 steps. I'll do a brief version here and I'll zoom in. Maybe, I think we got a full screen here. So
nice.
How do I get more rooms? And again, this is just a framework. So I think, how do I get in rooms where wealthy people are at? Well, number 1, wealthy people already hang out together. They're already together. You don't need to go reinvent the wheel. Wealthy people like to hang out with other wealthy people. So where are they? They're at the Ferrari Club of Dallas. They're at box seats at a football game. They're in networking groups.
Yes. Oh.
Right? They're in real estate meetups, social media. You can see them all here, right? So now I define this. There's ways to get in these rooms. You can work your way in or you could buy your way in. Either way, you got to get in these rooms. So working your way in is just sweat, right? You got to just do things that are hard. I'll tell you a quick story though. Our largest investor for our last fund, we raised 30 million. We oversubscribed it. He came from a cold LinkedIn message. Isn't that crazy? Now, we had sent hundreds of LinkedIn messages. One guy happened to respond. He put in $5 million into our fund. Kind of crazy. We've also joined other groups. For a while, I had a supercar. And so I joined different supercar clubs. And guess what? Everyone there also has a supercar. Now, I bought an Audi R8 supercar. It was $81,000. But Audi R8s are deemed supercars. For whatever the people that are in cars. So I had an Audi R8. This is a couple years ago. And I was driving on these. We'd go on these drives to the canyons with guys that had cars that were $500,000, $800,000. And I had a $81,000 car, but I was a part of the group. And I got to meet a lot of these guys and be in their network, okay? My dad and his first fund, they bought box seats to the Utah Jazz. They bought 4 tickets and they would invite people to come to the game with them, spend 3 or 4 hours with them, have dinner beforehand, etc. It was a way that they could get in better rooms. Because the little backstory, they would call in, this is before social media, they would call in to some wealthy CEO's office, and the gatekeeper would always say, oh, sorry, Mrs. Anderson, she's busy. She can't come to the phone. I can't take a meeting, blah, 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 blah. They started to call in and say, hey, we're calling Mrs. Anderson. We've got 2 tickets tonight. The Lakers are in town. We got LeBron and Luka in town. We'd love to invite Mrs. Anderson and her husband tonight. We got a parking pass, prepaid dinner, the whole thing. 9 times out of 10, that assistant will pass on that message to Mrs. Anderson. It was a way they could get more rooms. You get the idea. Secondly, connect. So once I'm in the room, once I've built at least met the person, how do you actually connect with this person? Briefly, I could spend 2 hours on this. There's ways to build a list. This is your phone. This is your Rolodex. This could be an email list, etc. But how do I build a list? If I'm at a networking event and I meet somebody, usually people ask, what do you do? They ask what your business is. I'll give them a quick 20 to 30 seconds flash roll, just very fast. Yeah, we manage about 300 million of aggregate portfolio management. I run a private equity fund. I run a hedge fund. And anyways, I'll give little hooks. I run a crypto investment fund. I have a partner who had the largest crypto mining facility in the state of Utah in 2014. We take a long-term approach to crypto. We've done pretty well over the last few years. And then tell me about you. Typically, if someone has an interest, they will come back to you. They'll when you say you run a fund, people generally like to talk to people that run funds. It's really interesting. But let's say they don't talk about that. You're talking to somebody that's wealthy and you're just talking about whatever. At the end, I like to say things like this. Man, Joe, it's great to meet you today. By the way, I run a fund. We get all these deals that are inbound to us. And by the nature of my fund, I only can invest in cryptocurrency, for example. But we have some incredible deals we're looking at, and I just can't do them. If I see a good deal, can I send it your way? Do you have a team that likes looking at deals? 9 times out of 10, that person goes, yeah, I'd love to see some deals. I go, great, let me get your email. I'll just put you on and I have no dog in the race. It's not like I don't make a finder's fee. It's just I like to pass, hand out. If there's a good deal, I can't do it. I'll just send it your way. Does that sound fair? Great. We share, exchange contact. And actually, over the next month or 2, I send them deals. I do get a lot of deals inbound. And so I actually forward deals to them, and they start to perceive Bridger as a deal guy. Bridger's always got deals, and he's got actually value for my life. That warms this person up. I'm just giving one example. That would warm that person up. You can put them on a newsletter, etc., but give them insights. And then eventually I go, hey, I have a good deal. It's called my fund. Would you like to hear about it? Or can I get some advice on this fund that I'm putting together? And then finally it gives me the chance to close. And then I try to put these 7 principles of persuasion. Every time I close, I go vehicle, internal, external. We don't have time to go over this, but I try to have scarcity and urgency in all of my funds. I try to get commitment. If you can do social proof, reciprocity, these are the principles of persuasion. I try to embed those into how I pitch my funds. I don't have time to go through it today, but that's if you take a screenshot of that, that's how it all works. So when I come back to it, that increases my odds of raising capital. It's not a solve all, but that increases my odds if I get in more rooms, if I connect better with the people that I'm in those rooms with. One example was sending deals their way. It could be other examples, but they see me as a high value person that adds to their life. And then finally, I get the chance to close them or ask for advice. I love asking for advice. Give me some advice on this fund. How would I put it together, etc. So, Reed, any follow-up questions from that? I shared that was a lot of stuff, but what do you think?
I think it's great. I'd love to know where to find more information about your principles of persuasion.
Yeah, so you're in Black Card. A bunch of these videos are in Black Card. I taught this at the Dallas event last year as well. So you'll have a full slew of content. We have tons of videos on every single one of these frameworks are all in Black Card. I teach all of these, so you'll have access to all of them, Reed. Yeah.
Great. All right, very interesting.
You get to hear me talk for hours on end. So I apologize. You can put me on 2x speed, but yeah.
I've done that.
Yeah. Okay. Appreciate you, Reed. Thank you.
Thank you very much.
Yeah. Someone said, I only hang out with Audi guys. Yeah, the Audi R8, man, was a hack. That was a really fun car. Me and Mason, we actually bought it together. We bought the car, we co-owned the car. We were kind of just getting started. So I owned half the car. He owned the other half of the car. And we would actually switch off. But it's funny. I look at the investors I have today. Quite a few of them came from meeting them at car meets, just going to local car meetups and local drives. That was one example of just getting in more rooms. Very cool. Let's hit a few more questions if you have them. And by the way, funlaunch.com, if you want to access Black Card, the stuff I just talked to Reed about, funlaunch.com/5K off. We are at 712. Well done, y'all. We have 58 more calls. How this works, you book a call, and that reserves your 5K off. It puts it on your email, attaches to 5K off, and that's how we track it as you have that credit. Now, that credit expires next Friday at midnight. If you go back to my iPad, actually, I didn't share this earlier. This is the summary slide here of what you get in Black Card. So if I zoom in, this is our 4-phase program: one-on-one coaching, weekly office hours, account manager, custom pitch deck design. This pays for all the legal build out in your fund. Private Slack group. We have a Black Card workshop event in 2 weeks. We have one at our office, and we have capital committee with Fund Launch Partners. You also get access to Fund Launch 360, our back-end fund management tool, partnership discounts, and Fund Launch AI, which is coming soon as well. Okay. Here it is. It's $5,000 to start. 0% interest. Book your call here, and you can go from there. It's a dangerous car. My friend had one and crashed his. Oh, shoot. Ours was the all-wheel drive one, so they stick a little bit better with the all-wheel drive. Rear wheel, I think all the Audis are all-wheel drive, though. Rear wheel get a little squirrely. Khalid, how about stock ETF investment funds? I talked about that a little bit earlier. Stock and ETF funds are a little different. I actually drew this out yesterday. I'll share this with you. Can you all see that? So this is how the business cycle of a business works. If you go here, businesses will start here. I don't know why there's a little uptick, but businesses start here. Some of them go through a J curve, and sometimes venture capital invests here and they burn money until they gain profitability. Some companies just start and are profitable. For example, Fund Launch was a bootstrap business. We were just profitable. We never raised money. We didn't go through a J curve, but some do. And then you're in the private markets. So this is where private equity and venture capital play. They invest in privately held businesses. And some are distressed. Some are like losing money. They got to buy them. They got to make them better. Some are they're buying here and they're hoping to take them an IPO, which is an initial public offering. IPO, after IPO, you're then in the public markets. Okay, this is, public companies play here. This is where hedge funds play. But again, these are all privately held funds. They have private investors that come and they place money in these funds. And these funds then place money in different categories of the market. Now, someone asked about what's an ETF or a mutual fund? ETFs are over here. Mutual funds, etc. They are actually public market securities. So anyone, you could put $50 into an ETF and you could sell it tomorrow. That's an electronic traded fund. This is like the S&P 500. S&P 500. It's just a computer that just trades. They buy the best 500 companies in America for you. You just buy it, has very low fees, and it's electronically traded. A hedge fund is actively managed and is more blind pool. It's more private. Usually the minimums are like $100,000 or $1 million to invest in a hedge fund. And then they take that money and they can trade, they buy and sell, they go long, short, they can do crazy stuff in the public markets that an ETF couldn't do or a mutual fund couldn't do. Same with private equity. They're in private markets, so you usually can't even access those deals, and same with venture capital. Hopefully that makes sense. All right, drop any questions you have. Somebody asked, are you willing to barter the entry price into Black Card program for a future equity stake in the fund? No, we don't do that, Natasha, because it's seen as broker-dealer activities, actually. So we actually, I think, legally can't do that. And secondly, we don't do that as well. So if I go back to the cost of Black Card, it's $5,000 to start. Average cost about $30,000. I tell this as well to people. If you don't have $5,000 to start and you can't cover the cost of setting up a fund, you probably shouldn't be managing money for others right now. You probably should just still work on your own business, work on what you're doing. Building a fund is a big deal. And you personally should have some startup capital yourself. If you're going to say, hey, I'm going to manage millions of dollars for other people, you probably should be pretty good at managing your own money as well first. So it's a little bit of a barrier to entry. We do that on purpose. And also we have a mastermind. So Black Card a lot of it is who you know, and it's part of and there's a barrier of entry to get into Black Card. We don't just let anybody into Black Card. You have to get over the hurdle because we want a pretty good group at our events and on Slack, et cetera, that you can meet and hang out with. So sorry, we don't barter that. We don't do that directly, but so this is the best offer we've ever done, actually, $5,000 to start. Usually it's 10 or 15 grand to start. We're doing 1 week only where it's $5,000 to start, but we do that on purpose. Yep. Yeah, the SEC matters. By the way, drop your questions to everyone, not just hosts and panelists, or put them in the Q&A bucket here. And if you're on another channel like YouTube or other places, come to funlaunch.com/hub and you can actually join this live call on Zoom. All right, other good questions. Has a new person having no experience to raise capital done a raise for $5 million before? 100%. Yeah. That's happened a lot. If you actually go to, well, I'll go on here actually. Let's see if it'll work. If you go to funlaunch.com, you can actually see testimonials of people that have actually done that same thing. Now, is it guaranteed? No. Did these people work extremely hard? Yes. Is it, can it just work for everybody? No. Black Card is best for people that they already are smart. They're already good business owners. They're already really great people. And Black Card just couples with a great person to help them be exemplary. So if I come down to, you hear from some of these fund managers, like this guy, Colin, this was his first fund he'd ever done. If you read this testimonial, he had ran oil and gas portfolio companies in the past for other people. He's just an employee. But then he said, I want to become the GP himself. He actually raised his $10 million first fund. You can see there. That was a year and a half ago. He's actually now since raised his second fund and done extremely well. Now, caveat, Colin is a very smart person. He works extremely hard. Like we didn't just give that. He did that. That's all on him, but we helped put him in a position to score. We had Percy on yesterday. He now has over 220 million in multifamily. Kudos to Percy. He's an incredibly hard worker, smart person, but Black Card coupled with Percy was very powerful. Does that make sense? So a lot of people actually, this is their first time ever raising funds. Heck, for me, Fund Launch Partners, this is our first time raising money in that vertical. And we did extremely well. Our first fund, we raised $30 million. Now it was hard. It was hard to do it. Took a lot of work. Raising money is a very hard thing to do. But anyways, it worked well. Good question here in Q&A. What are the best ways to promote your fund? That's a good question. Let's go. I mentioned this a little bit, so let's get a little more granular here on capital raising. So got my screen perfect. So I mentioned these ways of how, we get in the room, connect, and close. A lot of time, people say, you're going to raise money from friends and family. You probably heard that before. And then somebody goes, and fools. They'll say that as well. The 3 Fs, friends, family, and fools, right? So we'll take off the fools for a second, but friends and family. Why do you think most, if not all people raise from friends and family first? It's because that's who knows you the best. They've known you for years. And by the way, on Fund 2, Fund 3, Fund 5, you're still raising a lot from quote unquote your friends. Now I put quote unquote there because what happens is your pool of friends gets way bigger. People like to invest with people that they know, like, and trust. Who knows, likes, and trusts you the best? Your friends. So your goal, so then it's like, well, Bridger, wow, my family's broke and I don't have a lot of friends. Okay, well, I can't really help that your family's broke. All right, so we'll take that off the list. but you have no wealthy friends, that's on you. Make more friends. That's what you're doing here. You're going, when people are like, I'm going to networking events, I'm going to these charity. What you're doing is making friends. You're making a bigger pool of people that would call you a friend, that know, like, and trust you. There's not some magical science that you can just turn on a switch and you raise capital overnight. I'm sorry. What you do is you increase your pool of friends. So what are ways you can do that? You get in more rooms, you connect in those rooms, right? You do all this stuff. Another example is you bring on, I'll change colors here, I'll go blue. You bring on partners with better friends. Something we did at Fund Launch Partners. You know, we had raised, we were trying to raise $30 million. We had raised about 8.5. And man, we had tapped out like everybody we knew. We brought on a partner who was very advanced. And this guy was going to be an advisor to the fund. He loved what we were doing. And we just said, hey, for coming in, can you just introduce us to your friends? And he said, sure. He introduced to another friend. This guy had ran a multi-billion-dollar fund, very interesting individual. He liked us, and because the partner was his friend and he knows, like, and trusts this guy, he then came into the fund. He invested in the fund, and we made him a partner as well. And we said, hey, we're going to give you some equity in the fund. We gave him both equity if you help us introduce us to your friends. And again, this guy had ran like a $4.5 billion fund. And so he said, sure, I'll introduce you to my friends. So he introduced us to his friends. And guess what his friends said? They said, I don't know who you guys are. Like, I don't really know this fund, but I know, and I'll keep his name private. I'll call him A. I know partner A, and he's sharp. If he likes you guys, I like you guys. And I'm going to put some money in. At the time, we had raised about $8.5 million. After we brought on a partner who introduced us to all of his friends, we oversubscribed the fund. I think we closed at $30.15 million. We did that in about 6 weeks. That's just the hard, cold truth. People invest with people they know, like, and trust. Make your friend pool much bigger. So guess what we've done now? We launched Fund 1 with Fund Launch Partners, $31.5 million. The last year and a half, 1.5 years, and I think we did our final close last June, so it's really been 6 to 8 months. We have been expanding we're trying to make our pool of friends much bigger. So we're meeting people, family offices, we're talking to them, and we're building relationships with them. We're right now, one of my partners, Lincoln Archibald, is in Miami doing meetings with friends of friends he's hosting dinners. Hey, come meet us, come get to know us. Oh, a friend knows us. Yeah, they liked investing with us. They saw our reports. All of a sudden, we have a bigger friend pool. Our fund 2 right now, we're targeting to raise $75 million in this next year. Lincoln right now is doing the fund launch formula. We're soft circling people that are interested in this. And right now, we've soft circled around $20 million. Kudos to Lincoln and the team. They've done a great job of people that would consider us friends or a friend of a friend. And I think that was on our first, 8 meetings. We have another, 20 or 30 lined up. We believe we're going to hit 75 million potentially on our first close. Isn't that kind of cool? And that's from a guy, Lincoln's never raised money before. And he's our core capital raiser and the rest of the team. So this is, it's the cold, hard truth, and it takes time. Raising money is extremely hard. It takes time. It takes effort. And so when you bring in partners, see what is their friend place? Who knows, likes, and trusts them? What kind of weight do they hold? Can they introduce us to their friends, who then will introduce us to their friends, who then will want to put money in? Okay? Boom. Was that helpful? It's about as straightforward as I can give it. There's no magic sauce. Everyone wants, can I run a Facebook ad and people will invest? Really? Would you invest off a Facebook ad? Would you wire $500,000 to somebody off of seeing a Facebook ad? Probably not. Now, if you saw a Facebook ad and then you met them and went to a dinner with them and went golfing with and met the person, yeah, then you might send $500,000 to that person. So, all right, I'll stop. I'll get off my high horse here. Here we go. Let's keep going. All right, again, if you want to learn more, we have all this in Black Card, funlaunch.com/5K off. We have 58 more call spots available. Funlaunch.com/5K off. You can go book a call. It's only for 1 week only. I got my hat even here. Look at this. Boom, 5K off. I don't want to ruin my nice hair though. I'll tell you a quick story. I woke up this morning early. I drove 45 minutes. I spoke at an event to a mastermind group this morning. I had to hightail it back here. I got pulled over on the way here. I was speeding. I got pulled over, and I was going to be late for today's webinar. I got pulled over. And I've learned from what is it? I think growing up as a young men's leader in my church, he's like, dude, I have the best thing to get out of tickets. And I said, okay, tell me what it is. He goes, every cop is scared of getting shot and getting killed, like 100%. And so he's like, what you do, you pull over, be completely defensive. First off, pull over fast. Like even if you speed and you see them pulling out, just pull over automatically before they come behind you. He goes, that's the best. Because they're like, wow, this guy knew he was speeding and pulled over. Second, angle your car away from the traffic and get way off the freeway so they don't feel like they're going to get hit by a trap. Because like every cop thinks they're going to get killed, which by the way, like I would think the same thing. So he goes, number two, so pull over way off, angle your car so that when they talk to you at your window, they're not in danger of getting hit. Roll down all of your windows, turn off your car, even pop the trunk. Very defensive posture. So they can see in your back window. When they walk up to your car, they're going to be holding their gun. They look in your back window. They're trying to see if you have a gun, if you're going to be hostile. Have your hands up so they can see your hands, even out the window a little bit, so that they know they're not going to get shot. I did all these things. So I got pulled over today. I pulled over, rolled down the windows, turned off my car. I'm way off the side. I have my hands I didn't have them like hanging out, but I had them up so you could see them. He comes up the window. I said, hey, how's it going? And he goes, man, I had you going 60 in a 45. And I go, dang. And I go, I'm not even going to argue with you. You're probably correct. I'm trying to get to another speaking gig right now. Anyways, I'm not even going to argue with you. You're probably totally right. I think you got me. And he goes, oh, what are you speaking at? And I go, well, I have this event. I'm going here. And I told him what I was speaking at. And I'm like, man, cops, I love you guys. Thanks for what you do. And he goes, well, let me run your plates real quick. And let me take your driver's license registry. He took my driver's license and he said, hey, we got to get you that speaking event. Here you go. No ticket today. And I said, really? Thank you so much. And he sent me off. So it doesn't happen every time, but I think your odds of success increase of getting out of a ticket, which I got out of today. And he let me go in it was like record time. It was probably 2.5 minutes, 3 minutes. And I got here on time, really with 2 minutes to spare. So, all right, that was squirrel. That was way off topic. Let's get back to funds. Has this been useful so far? Hopefully this kind of Q&A has been useful to help answer a few questions. Again, all of this stuff we answer with our one-on-one calls and Black Card and all the stuff we're doing. Let me pull up, again, drop questions if you have. I have a question regarding when it's correct time to present a deal from John. Is he a VIP member? You want to bring him on the backstage? Okay, Adam, if you can bring on John to the backstage, John, we'll queue you up to come on live in a second. That's a great question. Yeah, when do you present a deal? When you're going through this process and you have a friend, how did you get to the point where you actually present that deal? Great question. Let's bring you on live here in a second. While we're bringing on him, let's share my iPad for a second. So we talked a lot today about this. I want to mention one thing over here. So when you're building out your fund idea, now, a couple things. It is hard to decide what you're doing from the outside looking in. Right now, it might feel like, wow, Bridger, this is confusing. There's a lot going on here. Look at all these scribbles we have on our iPad. And I'll be frank, it is. It is confusing. The first time you hear this stuff, it's like, it's hard to make sense of it. I was lucky enough to have a dad and a brother who worked in funds, ran funds, to teach us and drill this in my brain over and over and over again. That's why we have our YouTube channel. It's Bridger Pennington's the name of the YouTube channel. So we do all this because it's just hard to drill. Now, it's much easier when you're on the inside. And I say the same thing about whether it's a group, a program like Black Card, being on the inside and working with people every day that are doing this, starts to become second nature to you. One thing I'll mention is as you get into the inside, you'll start realizing this is the crux. We talked about building your edge and risk control return here. What you're trying to do is build something that has asymmetrical risk. Now, that is a fancy finance term. What does that mean? Asymmetrical risk means this. You've probably heard of something like this. You ever heard this before? High risk. What's the phrase? High reward. So higher the risk, higher the reward. If I made a little matrix here. Low risk, low reward. You've probably heard that before, right? Asymmetrical risk is what we and all fund managers are looking for, where you can find something that has relatively low risk for high return. That's what you're looking for. Does that exist? Yes, exists all the time, especially in private markets. There are plenty of things that have high reward for relatively low risk. How do we de-risk things? So if I go down to here now, this is how I would de-risk something in a business. There's a number of ways to de-risk things. There's operational expertise, the team, the way you position yourself, hedging. There's a lot of great ways you can actually decrease risk without losing reward. I was at the Greenwich Economic Forum a year and a half ago with Ray Dalio. If you guys know Ray Dalio, one of the most successful hedge fund managers of all time. This is what Ray said. He goes, at Bridgewater & Associates, we can reduce 80% of our risk without losing any of our reward. Essentially, what he's saying is we have asymmetrical risk in our hedge fund. And he's, again, one of the most successful multi-billion, decabillionaire hedge fund managers. That's what they do. I'll give you one more example. How does this happen? Think about a great example actually is flipping houses. Okay, so people that flip houses for a living, they don't see flipping houses as like a high risk activity. It's just their job. Like I had a friend, he's flipped 300 houses. He's like, Bridger, when I buy a house, I know I've done so many flips. Like, yeah, there's a few things that can go wrong for sure. There are risks, but his operational expertise is so low and he still gets the same reward from his first flip. Now, if I went and flipped a house, it would be very risky. It would be actually high risk, probably low reward, because I am not good at flipping houses. I just haven't done it before. I haven't done much. I don't know how it all works. Think about a business. If Elon Musk goes and starts a new business, the risk level is much less than maybe me and you launching a business, and the reward is probably much higher. Just because Elon Musk is one of the, if not the best entrepreneur of all time. Okay. So I'll get off my high horse here, but that's how I'd say we are looking for asymmetrical risk in the market. And you actually can find this a lot in private markets. That's where all these fund managers make their money from. All right. I think we got someone in the backstage. Who we got queued up? We have somebody back there, Christian. I think is it John? Yep, John's coming up. Awesome. John, welcome on. Let's bring you on stage here. Hit push to webinar. There you are. John, how's it going?
Good. How are you, Bridger?
I'm doing good. How can I help you?
All right. So I have a question. So I don't have a fund currently. I actually have my call at 3 o'clock. So at about 20 minutes to join the Black Card, which I plan on doing. But that being said, the deals I already have are, like you said before, presenting a bulletproof deal is the best deal to try to get people to invest into, right? So I have a couple of deals that are, in my eyes, and what I've had other, excellent people look at and say it's a bulletproof deal is good. Now, my only question is some of these deals are purchases from litigation. Some of these deals are purchasing from the current sale owner, which I can present the LOIs, but it's a non-binding contract. When would I then go and look for these deals to be sold without them being taken out from underneath? If you get what I'm saying. Like, would we want the deal under contract with no money to fund this deal yet, and how to kind of do that versus presenting the deal and just hoping that these investors are going to stay with me and trust me and not try to undercut, essentially, right?
Yep, great question. How much do you share? A couple of things you can do. If you're to the point you sign NDAs and non-circumvents, right? Those are contracts you could use. Now, when you pitch an investor, though, it's like, sign this contract, then I'll pitch you. It kind of turns people off. So what I do, I usually don't do this unless we're really serious and they really want to underwrite it. Great, let's sign an NDA. On first meeting, though, I just black out the info. So I say, hey, let's review deal. I'm just going to call it deal X, Y, and Z. Now it's a real deal, but I'm just going to hide the names just for, for whatever. You can make up a reason why you're going to hide the names. But you still give all the mechanics of the deal. You just hide the names and the location, but you give all the mechanics. And you walk them through and say, "God, this is a real deal. We're under LOI right now. I can't share the specifics because it's a non-binding LOI. We still got to win it and close it. But man, this is a bulletproof deal. And if you'd like to see all the details, great. You can sign an NDA and a non-circumvent. But this is what it is." And most people are like, most people, that is totally normal and fine to do on that.
Okay.
Yep.
Now, particular deals that you feel is bulletproof. So I've run into a situation. I'm in Massachusetts. So I run into situations all the time where particular cap rates on deals and things like that are not normal in other states. So for instance, I've had investors reach out from New York saying that the caps we have up here are much higher or much lower based off of what they see where they are at. When you start pretty much putting into place the mechanics of the deal, do you normally see, I guess what my question is really, are most of your investors in the same state you're investing in, or are the investors kind of really spread out and they just trust you with the deal essentially when you first start off?
Yeah, good question. It depends. I think it depends on your network of people who you know. Up in the Northeast, you guys are pretty, I live in Utah. It's like we're really spread out. You have a lot of states nearby you, and I would, whoever you're talking to, great. And I think people invest cross-border all the time. Cross-state, I mean. So I wouldn't let that deter you. If they really push back on some kind of cap rate or metric, you go, well, yeah, maybe you're right. Let me just show you the deal and all the stuff I'm looking at and tell me where I'm wrong.
Right.
Some people love to be so smart. You go, great. Yeah, be smart for me. I would love some advice because this is what I have down. This is all the materials I have. Here it is. Let me just show it to you. And don't be a wise guy about it. Actually ask for advice. Like, no, really, give me some advice. This is what I'm seeing. I've looked at hundreds of deals. I was shocked when I saw it as well. It's that good of a deal. I asked myself, how is this wrong? What's not right here? So I looked under this rock and I looked over here and I tried this and I checked it on the audit. And man, this thing seems, at least in my eyes, pretty bulletproof. What do you see? Do you want to look at it for a minute? It's actually a great way to present a deal and also get advice. They might actually really point something out that you missed. Or secondly, they'll go, yeah, actually, it's pretty good. I might want to put some money in. So that's how I would approach it.
Okay.
Is that helpful, John?
Yes, it is helpful. Can I do one more question? More about
sure. Yeah, we got you live. You got your call in 15 minutes. So yeah, let's do one more and let's go there. Yeah.
So the two deals I have, one of them is a 31 mil purchase and it has an 80 mil pro forma behind it. For market purposes, is there a particular time in the market when presenting these deals make sense or don't make sense? So for instance, should we be attacking extremely large ones, like a 31 mil looking for an ask and getting with an 80 mil pro forma behind it? Or should we be looking at, I have smaller ones that are like a 2 mil ask that have like an 8 mil return, right? So like, is the market now good for larger deals versus smaller, or is it kind of all the time, any deal? Just depends on the deal.
I wouldn't say larger or smaller. There's a big timing shift that goes on.
Okay.
Investors are doing deals all the time in both large and small. It's I think that's more of a sizing question from the people you're talking to. So, but again, I would say both are fine. If you came on yesterday, we had two real estate portfolio managers that manage hundreds of millions of dollars. Yep. Both of them just shared with me yesterday. They said, we really haven't bought much in the last 2 years. Right now we are buying. This is a good time to enter the market, which is, hopefully some good tailwinds for you and when you're coming in. A sizing question though, if I'm talking to, like we had this last year, we talked to a couple investors. We were raising a $30 million fund and they said, oh, well, our minimum check is 10 million. And we don't want to be less than, we want to be 10% of the fund or less. Like, sorry, your fund's too small for us. So it just depends on who you're talking to. If you're talking to larger institutions, larger family offices, they might have a minimum check size. And like, an $8 million deal is just not even not even worth our time. So that can happen. But if you're just talking to anybody, no, that small or large deals, I don't think there's not a preference either way. Depending on, it's more on who your investors are and sizing for your investors.
Okay.
Is that helpful?
It is helpful. Yep. I appreciate it. Thank you. That's all I need. Thanks.
I love it. John, looks like you're doing good stuff, man. Congrats. Keep it going. Hopefully we can help you in Black Card and get you going, and maybe see you at the Salt Lake event in 2 weeks. I'd love to meet you in person.
All right. Perfect. Thank you.
Thanks, John. See ya. Pretty cool. I hope he crushes it, man. That's awesome. All right, let's keep moving here. So, and by the way, if you want to book a call, like John was hopping on a call with our team in 12 minutes from now, there's a call link down below, fundlaunch.com/5K off. You can talk to our team about building a fund. You get $5,000 off, all the cool stuff. Event in 2 weeks. We got some fun things going on. 0% financing. We'll go from there. All right, how we doing, team? We've answered some good questions today. I'm going to pull up my thing. If you have more questions, I want to answer them. VIP members, I want to make sure you have a chance there. Awesome. So again, if you share my iPad one more time, you'll see me use this a lot when I train, but this encompasses, we're getting pretty messy here. But all of the sub frameworks of how do you build your fund, the fund types, how do you launch, raise capital, how do you build out your investment committee? How do you build out your firm, your fund waffle? How do you do international feeder funds? We do all this in Black Card with you. Like, this is all the stuff we talk about with multiple videos. Today's just a little taste of kind of what we do. But I love doing free content. Like, our YouTube channel is chock full of a lot of this stuff as well, because we are on a mission to democratize Wall Street and help more people launch investment funds. So, well done today, you guys. Thanks for joining. I think let's hit one or two more if we've got them. And then again, this is the final call, fundlaunch.com/5K off. We have 57 more calls, and then we are booked out on 143 call spots. That'll be $1 million of credits given to Black Card, which is pretty cool. So again, you go here, you get the full incubator, you get one-on-one coaching. We have about 15 plus coaches in Black Card. We have 50 office hours a month going on. You can hop and join on office hours. Full fund legal is built out with our 5 legal partners to help build your fund. You have the mastermind. We have events in 2 weeks. You can come out to our event. We have the tools. You get Fund Launch 360, full back-end marketing. You get all the partnership discounts. We have about 30 plus partnership discounts that you get to use and just when you're building your fund. And then Fund Launch AI coming soon. You can see here. So again, 5K to start if you want to join for this kind of cool promotion we're doing. There's the link. Go book a call. We'll go from there. Jolene just booked a call. Welcome in, Jolene. It's pretty awesome. All right. Thank you all very much. I think we got one or two more here. What are the main differences between syndications and funds? Good question. So a syndication of fund, well, the main difference, a syndication does one deal at a time. A fund does multiple deals at a time. That's really the main difference. Now, I like people that do single asset funds. We help people do that in Black Card as well. So if you had a deal here and you're raising money for that deal, raising money for that deal, you could do a syndication SPV or do a single asset fund. I would tell you to do a single asset fund. They're about the same cost. We actually help people do these as well for about the same cost of SPV. These are much more protected. They help you as the fund manager. They help you scale, etc., to do one deal at a time. A full out fund is here. That's when you're going to go do, you're like, hey, we're going to go do 10 deals over the next 2 years. And we're going to go buy all these, and we're going to start with one and then do two. And then, every 3 months we're doing a new deal over the next couple of years. And there's a portfolio of deals. That's what a fund would do. So single asset fund does one deal at a time. What they call a blind pool fund does multiple deals in a portfolio. So like I invested in a real estate fund. They have, I think, like 51 properties in the fund. So I just put one check into the fund. They go buy 50. And what's nice as an investor, if, 2 of these properties are probably going to lose money. And 2 of them are going to make a ton of money. And then the other 47 are going to be a blended average return of, I don't know, let's call it 17% or whatever the number is. Okay. That helps you do that. Can you start with a single asset fund and switch it to a multiple deal fund? Yes. Yeah. A lot of people do that. So we have a lot of people So we have Black Card Single Asset Fund, which is a version of Black Card. It's much cheaper than the full Black Card. So if you guys are just like, hey, I want to do one deal, you can join our Single Asset Fund. It's so book a call, $5,000 down. And then if you hop on the phone call, be like, hey, I'd love to talk about single asset funds, SAFs. Yes, we do this, and we do this for a fraction of the cost of Black Card. We can help you build one deal at a time. It covers the legal cost, et cetera, of building that out. Yep. And then once you do a couple SAFs, you can then roll those or roll some of those entities into a full blind pool fund later on. Yep. Totally good. All right. Good work today. We talked about the super cycle. We talked about investing there. What's going on in the world right now? We talked about Howard Lutnick and his, maybe we'll have a 5 or 6% GDP growth here in 2026. There is a massive tidal wave in this direction right now of great things that are happening, at least for America. I don't know about the rest of the world, but if you live in America, man, what a time to be alive and to be an entrepreneur. I'll hit these one more time if you hopped on late, but man, again, this is my view of the world, but this is such a crazy time to be alive. Again, Trump and the Trump presidency, not perfect at all. But as far as the things that we're at least seeing from economic data so far are pretty phenomenal right now. If you share my screen, trade deficit has been cut in half in the last 8 months. Tariff revenue up $190 billion. Almost 2x from previous tariff revenue. Unemployment at 4.4. They are defying gravity right now. Inflation at 2.7, below expectations. GDP at 4.3. Could be 5 or 6% GDP growth in 2026. 6% is unprecedented. That is China with central planning and at the peak of China's growth was 6% GDP in 1 year. We have line of sight right now to 5, and Howard thinks if we get rate cuts, we'll see 6s in 2026. We have control of the largest oil supply on earth with Venezuela right now. I love that they just were transparent. Like, yep, we have the oil. Whether you agree with it or not, this is what is happening. New Fed chair in May that will most likely cut rates significantly. That'll boost all of real estate that has been pent up waiting for rates to get cut. Waiting for, how many friends do you have that are like, I'm going to buy my first house when rates drop? Okay, rates are dropping. Median home prices really haven't fallen that much. They've fallen 8 to 10% from their peak, even though it's twice as hard to afford a home with the rate hikes that we've had. When rates cut, I think we're going to see a flood of activity in the real estate market with new Fed chair and across. We have 5 emerging technology platforms at once and $9.8 trillion committed investment in the United States. Unprecedented amount of growth. These are tidal waves hitting. Do not miss the boat. Don't miss the I don't know what the years are going to be, but let's call it the mid-2020s that we have right now. What a time to be in business. What a time to be an entrepreneur. I mean, it has never been easier to be an entrepreneur than right now. We have YouTube, for crying out loud. We have we have Gemini that will just teach you whatever you want to know. You can build a website. You can get started. It is never, think about your ancestors that had to try to start businesses back in the 1800s or the early 1900s or even the early 2000s. How hard it was to start a business. Yes, today it's still hard to start a business, always is, but it's never been easier. And I do not want to look back when I've got gray hair and I'm old, be like, man, I wish I would have taken a shot. I wish I would have noticed all of the great things going on instead of being a pessimist. Instead of saying, it's going to collapse, it's going to be a bubble, it's going to be fraudulent, and leaned into this and said, maybe there's something here that all of the largest companies on earth, the Mag 7, are fully focused on this. The smartest, brightest, most wealthiest people on earth are all focusing on this right now. Maybe I should focus on it as well. Maybe challenge your own beliefs and say, someone, and I'm not saying this from my point of view, I'm talking about Meta, Google, Apple. I mean, you name the company, NVIDIA, they are all focusing heavily on this, especially this 5 emerging technology platforms. And they are telling you, go listen to their interviews. They're like, it's coming. It's here. It is disruptive. It is everything we're working on. We are full-time, full access on it. This is what we are doing right now. What a time to be alive. What a time to be alive. When you have, and I go back to this, all of these smart people right here, Sergey Brin, Jeff Bezos, Mark Benioff. I mean, this is just a quick list of excellent entrepreneurs full-time back in work because they recognize the season we are in. We are in a crazy season. Do not miss this moment. And I believe a great way to attack this moment is by building an investment fund that then can invest and be a part of these huge tidal waves that are hitting right now. If you want to talk more about building your fund, fundlaunch.com/5K off. All right, y'all. Happy investing. Let's go crush 2026. It's going to be an amazing time. We have 54 more call spots. We're going to be sending this out to email and social media. I think we'll probably fill these up in this afternoon. This is probably your final call. Here we are. If you booked a call, make sure to show up. We'll see you and hopefully see you at the event in my office here in Salt Lake City, Utah. You'll come hang out with us for 2 days, do a little skiing maybe, see the mountains in the winter. It's pretty fun. So we'll see you out here in a couple weeks. With that, thank you all so much, and we'll see you later. Bye-bye.